Okay, so the next topic is once again I'll go through some charts, and I've covered this again in the introductory session, but I think it's relevant at this point in time for the purposes of showing you how to or what to look out for when writing your trade plan. I think it's relevant to bring that back to your attention. So we'll go through trends, retracements, oscillations, and across multiple time frames. All right, so once again, this is a Euro USD chart, a monthly chart from 93 to 2000 till to date. And what you see there is there's a bearish trend, there's a sideways movement, and there's a bullish trend, right? Within the bearish trend, you have a very strong retracement going against the trend. Now, once again, so whenever we say retracement, the word Fibonacci should come to your mind. I'll repeat that. Whenever we refer to retracement, the word Fibonacci percentages or levels should come to your mind. And once again, Dime will do an excellent presentation there. She's pretty good at Fibonacci's. I would strongly suggest that you go through that video when it's up and try and understand what she's the message she's trying to convey there. So in this case, it's a retracement, a strong retracement against the bearish trend. Mind you, it's a monthly chart. So this went over years. So this retracement started September 97. I don't know if you can see the dates on below down here, but it's September 97 down to somewhere, I think it's about December-ish 98. So for about over a year and 3 months, this was a retracement going long. And there were many trades that you could have taken in this retracement going long as well, of course. Anyways, then it continued with the trend, a little bit of retracement here, dropped, a little bit of retracement there, dropped. This was a retracement, went back, and this movement, this action here was a sideways movement. Then it decided to break the sideways movement or the oscillator, right, and continued back up. So that was a bearish trend, retracement, oscillation, back up, bullish movement, right? Within the bullish movement, there's your first retracement, there's your second retracement, there's your third retracement, strong third retracement, and the latest one is the strongest of them all. But mind you, look at this. Right from here till there, till right here, it's bullish. The recent subprime crisis bearish move on the Euro USD is just a retracement in the overall context of the bullish trend. Think about that for a second. Okay. And this is again a huge concept that you need to understand, multiple time frame analysis. Let me pause here and make a statement. Whether it's chart reading, understanding trends, oscillators, retracements, whether it's support resistance on a 30-minute chart or a monthly chart or a daily chart, whether it's Fibonacci retracements, identifying them on a monthly chart, a weekly, daily, 60-minute down to the 5-minute. All of them, chart reading, support resistance, Fibonacci, they all happen on multiple time frames across all the pairs. Think about that for a second. Number one. Number two, as I've said before, multiple time frame analysis is nothing more than a magnifying glass. Okay, and all these free and professional price charts, what they do when they offer you monthly, weekly, I call these options. Okay, so you have option to look at a pair either from a monthly lens or a weekly lens or a daily lens, 60-minute lens, a 30-minute lens, a 5-minute lens. Now keep in mind that the wider the time frame, the longer the time frame, the stronger the trend. I'll repeat that. The longer the time frame, i.e. monthly or a weekly or a daily compared to a 65-minute, 30-minute, the longer the time frame, the stronger the trend, the stronger the support resistance, the stronger the Fibonacci. And I'll cover this at the end when I go into big picture thinking slide. So pay attention to that. Coming back to my point, when by offering these options of looking at any time frame, what these brokers do or these platforms offer is they help you magnify a certain point of reference, time frame, right? but the overall trends remain the same. So look at this. When I flip to the weekly chart, you will notice that it'll still go. It starts from kind of here to date, and it'll still go long, short, and long. Let me do that right now. See that? That's a weekly chart. Long, short, long, short, long. But see what's happened, friends, is look at this consolidation, for instance, when it went sideways. 1, 2, 3, 4, 5. And for those of you who know the Euro US, I think the low here was 50 to 83. My point is there's 1, 2, 3, 1, 2, 3, 4 candles on a monthly chart that covers this sideways movement on the Euro USD. Guess what? When you open it up on a weekly, take it one notch down or take a magnifying glass closer. And I don't want to count this, but what is this? This should be at least 20, 22 or more weeks. So essentially, each one candle on a monthly, right, is broken out into 4 or 5, depending on how many weeks were there in the month for that relevant month, so to say. Okay. And once again, when you're on a weekly chart, you would again, within that weekly chart, you would see a bearish move. Within the bearish move, you would see retracements. Let's go back. You see this bearish move. Now, on this bearish move, and as you become expert chart readers, you can start seeing that. But when you're beginners, it's a bit difficult to get it. But you would probably look at this and say, oh, I see a retracement there, right, on a monthly chart. But even within these, there are certain retracements. Look at that. There's some retracements. These are retracements, right? Minor though, but nonetheless, there are retracements, which you can see as you start magnifying the time frame, multiple time frame analysis. So bearish on a weekly, retracements on that trend, bullish. Once again, within that bullish trend, you've got some retracements and sideways movements, oscillations. And then you have a huge bearish trend. Once again, if you go back on the monthly chart, you would see that 1, 2, 3, 4, only 4 monthly candles show you that bearish move, which is what you want to see, the big picture, always big picture, right? But guess what? You want to see more data within these 4 candles, and I'll repeat that. You want to see more data, i.e. support, resistance, Fibonacci, and much more, in these 4 candles as this pair is going long. As this pair is going long, because those are your entry points for going long, back up long, right? The weekly chart gives you that, and as I go more into depth in dailies, you will see more data, support, resistance, Fibonacci, whatnot. See this retracement back up, this when it came down till here, and I'm not sure if you can see it very clearly, and this kind of blue candles going back up is not so clear on these 4 candles. Okay. Okay, so that's the weekly, and then the next level, as I go on daily chart, you will see it'll expand or further magnify this section to the right. Mind you, it hits down here. I think this was 23.28. This level is 24.55, and this level up here is 47.18, and so on and so forth. And then it took off. This is a daily chart. This level down here is 23.28. When it hit rock bottom, once again back on the weekly chart, it hit rock bottom, 23.28. Then it spiked up, 47.18, came back down, and then started going back long, of course, with regular intervals and sideways movements on its way. And I put up a little Fibonacci here. You will notice if you were to draw a fib from 23.28 starting up to 47.18 ending, there was a 76.4%. I can't see that number very well, but on its way back up, it came right down, touched that, and continued. So it doesn't happen all the time, but as you kind of progress it, this is more towards advanced studies, but as you go more towards the advanced studies, you'll start learning how to identify under certain market conditions, under certain times of day, how to sync up, pair up all these events together, and start getting into trades profitably without staying up at night. And I will emphasize that because that's the core foundation of Jeff's teaching, by the way.